Interest only or repayment mortgages? What's best for buy to let in the UK? Let's discuss it now. Interest only or capital and repayment?
Yeah. Most people ask me, why are buy to let mortgages interest only? Takes me to my free giveaway.
You've got a free giveaway today.
Yeah,
So what is your free giveaway today? I'm Jess.
I'm Adam.
We are forthelandlords.com. We help landlords get more money, less hassle, and their time back. If you're a landlord and you want to start, scale, or optimize, this channel is for you. Let's get into today's video. We're talking about mortgages. It's something that we think everybody knows, and then every now and again somebody asks questions.
Quite often.
We're assuming stuff. So let's not assume. Let's break it all down. Interest only or capital and repayment.
Yeah.
What's the difference? Should we start with that?
Yeah. Really quickly, just really quickly.
Most people, if you buy a house, you're on a capital and repayment mortgage. So 25 years, I've got 25 years to pay my house and then I'll own it. So what you're effectively doing is you've borrowed some money and every month the bank charge you interest on the money you've paid, and the money you pay them covers the interest and a little bit of the capital. And as time goes on, you pay the capital down, and towards the end of the mortgage, because don't forget, they've figured out how much the mortgage payment is every month, and it's the same all the way through the period. Towards the end, you're paying less interest and more capital down. That's the way it works. Most property investors do not do that. They buy a house on an interest-only mortgage, and they just pay the interest. So they're never paying down the capital, which has some benefits, but it also raises some questions, and that's what we're going to answer today.
Most people ask me, why are buy to let mortgages interest only?
I get
asked it all the time.
Yeah. So first of all, they don't have to be. Not all are. You can get a capital repayment mortgage. In fact, if you have an interest-only mortgage, read the terms and conditions. You can overpay.
You can overpay a certain amount each year. Yeah.
The reason is, in the most part, cash flow. So if you have an interest-only mortgage, you're just paying the interest. You can deduct the cost of that interest against your profit and loss, as long as you're in a limited company. Make sure you're in a limited company. Take tax advice and all those things. If you're not in interest only, you're paying your capital down as well. You can be in the position where you've got a profit, but you've used your profit to pay down the capital, and that's not tax deductible. So you've got less cash in the bank every month. So if you've got a boiler breaks or something like that, you've got a less resilient portfolio. And let's face it, some people want to live on the income from their property portfolio, so they're structuring it in a way where they can draw out some capital. Of course, that creates some risks. What happens at the end of the mortgage product? That interest-only product is still 25 years. So what happens at the end of 25 years?
A lot of people ask that again as well. What happens at the end when they forget that every time you refinance on a 2 or 5 year deal, it resets.
It resets. So that's a penny drop moment for lots of people. If you refinance after 5 years, after 10 years, then the term resets. But the honest answer, the straight answer is, what happens at the end is you have to pay it back. Simple as that. At the end of 25 years, if you've never refinanced it, you pay it back. Now, how could you do that? You could have saved up some money to repay it back. You could have bought twice as many houses as you think you need in retirement, sell half of them and use that capital pot to pay off the others. That could be a way of doing it. Or, I think this will be mine, never say never, but I think this will be my route. I buy in a limited company, I've got limited company mortgages. I think we're going to keep refinancing, probably less aggressively over time, although who knows, when the kids get involved, maybe they'll grow again, maybe they'll make the next 100 million. But they'll tone that down, and I can pass the mortgages over to the kids inside the limited company. So my answer is, I'm never going to pay them off. I'll just keep refinancing them. One of the nice things about having leveraged properties, some people just don't like having mortgages. They want to own everything outright. If you have mortgages, inflation is eroding the value of what you borrowed, but it's putting the value of the thing that you have borrowed against, the property, up. It's a beautiful equation when it goes right. So I'm into that. There is another thing that it's my sort of structural answer, if you like. if you're a growing property portfolio, you're a landlord who's growing their property portfolio, no matter what your view on the end game, whether you're going to sell some to pay the other bits off, whether you're going to pay it down gradually, whether you're never going to pay it off, if you're growing, it costs money to borrow money. So if you go to the bank, there's fees to borrow it, there's the time and effort of doing it, there's broker's fees, it costs money to borrow money. Now, in the example of a property portfolio of 10 properties deep, if you have property number 1 on capital and repayment, and then you're buying property number 11, 12 and 13, to me, and mathematically when you write it down, it does not make sense to be borrowing money and paying to borrow money on properties 11, 12 and 13, whilst at the same time repaying back properties numbers 1, 2 and 3. It doesn't make sense because all of those things cost money to do, to pay back. I've got a loan, why am I paying it back when I'm still taking some money out there? Mathematically, it doesn't work. Now, later on, you can decide, I'm just going to stop, sell half, do this, whatever you can do. But the maths of a growing portfolio doesn't make sense to me to be paying down whilst I'm still going out. I think it is worth talking about security and saving. Everybody's got their own idea on debt and how much they're comfortable with. You know, debt is bad, isn't it? Like you were saying. So well-serviced, well-managed debt is something that
good debt is good.
Good debt is good.
Yeah. Now here's another one. So people often say to me, do you have a mortgage broker you can recommend? And what I always say to people is, of course I do, and I'll gladly recommend her to anybody. It's amazing how many people use a friend of a friend or a family friend and someone who's not a buy-to-let specialist. So if you're thinking of taking out a buy-to-let mortgage or buying something with a mortgage, you need to use a specialist. I think that's the key before you do anything. Don't be worrying too much about interest only or repayments. You need to speak to a specialist mortgage broker.
Yeah, not all mortgage brokers are made equal.
No.
Yeah, most mortgage brokers spend all their day doing normal residential mortgages, and they might do they can always do the odd buy-to-let, but doing the odd buy-to-let,
and they might, and you know, your friend of a friend broker probably chooses not to do buy-to-let because he sees the low value houses as small fees.
Yeah.
But a specialist buy-to-let broker who's doing high volume and knows that
that's the key distinction.
They know it inside out.
When choosing a mortgage broker for buy-to-let, they will be doing lots of buy-to-let if they're any good, because buy-to-let procurement fee, that's how a mortgage broker gets paid, is actually quite low compared to the big private residences. So to be good, to earn the money, they've got to be doing lots of them, which is fine because there's lots of them to be doing, but you'll find specialists that just do lots of buy-to-let.
It takes me to my free giveaway.
You've got a free giveaway today. So what is your free giveaway today?
If you follow the link below, book a call with me, and if you want to discuss mortgages, I can introduce you to our mortgage broker. She works with lots and lots of our clients. She's fantastic, and she will give you some great advice.
Yeah, absolutely. Good free intro there.
There we are.
If the video has been useful to you, please like it. If you want more of this, subscribe and hit the notification bell. That means you get notified on your phone or an email. You get to choose, and then you'll know when the latest video drops. It'd be really, really appreciated if you could spread this. If you found it useful and you think these two guys, they're interested and know what they're talking about, spread the link, get more people to join the channel. It helps.
All right.
Bye for now.